Hello, welcome, Ollie. Good afternoon, good evening, good morning, depending on where in the world you're joining us from. I'm here in Melbourne, Australia. It's a nice and early 7 a.m. Got my coffee to make sure that we can get through this conversation without me falling asleep. I don't mean you're going to be boring here, Ollie. You're obviously not. Um, Welcome to today's webinar, everybody. Agency retainers at work: how to package, price, and prove ongoing value. I'm Stephen Neville. I'm the CEO of BugHerd. We work with thousands of agencies around the world, helping them manage client feedback and deliver work more efficiently. One of the biggest challenges we see is about creating kind of predictable, sustainable revenue. That's what we're diving in today. I'm joined by Olly Feldman, Global Head of Sales at hosting.com. Olly, you're an expert in this space in particular. So do you want to give us a quick kind of background on yourself and also on hosting.com?
Yeah, absolutely. So, hi everyone. I unfortunately don't have a Melbourne coffee because it is the best coffee going. So, I wish I did have a Melbourne coffee.
It is.
Um, but yeah, as Steve said, I'm the head of global sales here at hosting.com. We are a global hosting provider for agencies. And I've been partnering with agencies for over a decade in hosting to help them resell hosting in a profitable way through retainers. And over these years, I've supported thousands of agencies with their hosting, seeing the ups, the downs of project work, the wins made from successful retainer strategies, and also been involved in running an annual agency retainer strategy report, where basically we interview hundreds of agencies each year to see what they include in their retainers, what profit they're making, what they're charging, and ultimately seeing what is making a successful retainer. So yeah, looking forward to diving into it.
Excellent. That sounds very interesting. Before we get into it for a second, just quick housekeeping. We have both the chat and the Q&A open, so if you want to drop any questions you have, we'll keep an eye on them, cover them as we go. We'll also set aside about 10 minutes for Q&A towards the end. And yes, the link it's been recorded, so we'll send out the link following this. So I think given here, everybody really knows why retainers matter. Let's dig into like the meat of the question, I guess, which is, why do you think it's a challenge? And why do you think so many agencies struggle to make retainers work?
Yeah, it's a really interesting question. It's one we get asked a lot when out and about talking to agencies. And I think it really comes down to a lack of focus and rigor around that retainer. So a lot of agencies are doing retainers, but a lot are struggling to make it work successfully. And I think it's because they're not sufficiently productizing their offering. So no, they're not focusing retainers enough around their ideal clients, the ideal product mix, and critically are not charging enough. It's a thing that comes up quite often in agencies, right? But they're typically not pricing them in the right way to be profitable. They need to be simple, they need to be clear, and they need to be priced to guarantee profit. If you can't repeat it, then it's not a viable retainer.
So just exploring that a little bit, like what does a good productized retainer look like?
So a productized retainer is taking the services you do best as an agency, the services that you're most skilled at and that make you the most money, what's most profitable, and turning that into a repeatable package that you can sell to a client. So it's this product that does X. It gives you this solution to your problem, and this is how much we're going to charge you for it. So it's turning it into a product rather than saying, every time you come to us, we're going to custom create you this amazing thing that's going to solve the problem. It's turning it into an actual single product with a defined outcome.
And from the agency side, is that something that you have to be able to have a very clear idea of the time and repeatability of the process around that piece of work?
Yeah, absolutely. So there's a saying I love, which is basically you need to turn your agency into a bakery. So you need to have a defined set of products that are highly profitable and repeatable. So every day you can come in and build the same things, sell the same cakes, rather than it being like a building site where you're constantly looking at blueprints, changing things, moving a wall around, because that's when you get project scope and lose the profitability.
And in practical terms, what's an example of that, or something a piece of work like that might be?
Yeah, so an example could be website maintenance or something that's a bit wider for everyone else, consultancy. So consultancy for an agency is one of the things we've seen growing the fastest in retainers over the last 2, 3 years. It's now jumped to the number one most profitable piece that agencies are including in retainers. And consultancy, people will be like, okay, well, we'll go and sit down with you and we'll figure out what you want to be consulted on, and then we'll figure out how many hours that's going to be, and we'll charge you an hourly rate for that consultancy. Whereas actually, instead, you'd productize it by going, okay, well, we do an SEO strategy consultancy. We do a digital marketing plan consultancy, and you turn them into these individual products. And rather than saying it's 8 hours of consultancy work where we come and sit down with your team, it's, well, if you buy this package, we guarantee to deliver you a strategy that enables you to implement an SEO strategy, or this is going to give you a strategy around digital marketing to ensure you convert 30 leads per month in your business. So rather than saying you're buying this many hours and this much time to do X, it's you're buying the solution to a problem, and that's how you would productize it
Okay.
at a set price as well for a set outcome.
Yeah. Great. And so, what do you think the biggest misconception people have around setting up retainers is?
Yeah, I mean, the biggest misconception is something we hear all the time why a lot of people don't like doing retainers is that you'll inevitably get too much project creep and therefore lose profit. I think this is a myth, and it only becomes a reality if the retainer has been, designed incorrectly from the start. If it's lacking clear boundaries, lacking a clear scope, a fixed profitable price, and if it's not based on that value piece that we're just mentioning and not hours, then it eliminates that creep and guarantees profit.
Okay, great. Um, so, I mean, we've touched a little bit on it, but just digging in a bit more deeper about how do you see the best in terms of tiering and kind of creating retainer packages? So, what's the process for where someone should start with that?
Yeah, absolutely. I mean, there's lots of different ways you can do it, and it does depend on the agency, the service you offer, and what sort of niche and vertical you're in for how you look at it. But when you start to productize everything, you should productize everything with 3 packages. Now, if you're a full service agency, that could be 3 packages that encompass all your services, or you can split them out and have multiple packets of 3. But the reason it's 3 is if you look into psychology and the way the human mind works and how we make decisions, we like making a decision out of threes. And when you literally grow up with fairy tales with threes, like 3 blind mice, 3 little pigs, all these things, it's sort of grown into your psychology. And then when it comes to making a decision on something, if you have 3 options, a cheap, best, better, it makes it really easy to make a decision because you know whether you want the cheap product, the one that sits in the middle, or an expensive product. So the way we always look at it is a 3-tier model. So you want an anchor product. This is the one you'd always show first, and this product is very much the one you want people to be buying. So this is your anchor, your ideal retainer. The key thing with this, you'd call it your flagship package, and it needs to be based on a research. You need to do a ton of research around your ideal customer. So look at your client base. Who is the most profitable? Who causes you the least amount of issues? Who uses the services that you want to be selling? Do tons of research around that. You need to be really, really clear on the data from that when you do the research on the ideal customer. And then you build that package on the most effective product mix of the products you want to be delivering that are super profitable, that also attracts the right customer. That's your ideal package, the one you sit in the middle. You then need an entry level option. So you need a no frills option where someone who's coming to your agency can't afford and isn't in that bracket yet of your ideal customer, but you want a step in the door because you don't want to lose them. You want the opportunity to upsell them down the road. So you need that entry level option for them where they don't need to make a full investment yet. And then you need a premium option. So this is your bells and whistles package for clients with deeper pockets or higher demands, or more importantly, the ones that you can strategically upsell and move into that higher package once they start sort of going outside of those parameters. And the parameters are the most critical element across the tiers. You need to have really, really clearly defined boundaries to all of your packages. Each package must clearly state exactly what is in scope and, more importantly, what is out of scope, because that's what stops the project creep and simultaneously gives you that clear path to upsell. Because when a client asks for something that's outside the boundary, it's a very clear conversation. So actually, as we showed you up front, these are our packages. You now want something in this package, so we're going to move you on to this tier.
Sounds very much like subscription pricing, to be honest.
Exactly.
Very,
Exactly that.
very similar game that we're in. Yeah,
To be honest, a retainer often is referred to as a subscription.
yeah,
And I've worked with so many clients who actually almost turn that agency into a SaaS product,
yeah.
where, okay, you're buying different things from them, consultancy, SEO, marketing, whatever it may be, but they've turned it into that SaaS subscription. And a lot of them even taken away the upfront payment and done it like a 5-year contract at a lower monthly price. So you can do a lot with retainers.
And do you see, generally speaking, it's most people it's still a hybrid where they'll be doing kind of hour-based work as well or project-based work as well as retainers, or are you seeing um, more and more kind of people which are it's strictly like subscription driven or retainer driven?
Yeah, it's a really interesting question. I think it's been changing rapidly, particularly over the last 6 to 12 months. So I would say over the last 5 years, we've been seeing more of people moving out of the usage-based model into a hybrid model where they want clients to be on a retainer, but they're slowly building into their business. And typically the way we're seeing that work is agencies will be taking on new clients on a retainer model. So the new clients will be on that flat priced retainer-based models, and the old clients will be more on sort of usage-based, project-based models. However, over the last 6 to 12 months, where agencies have really struggled to win new business, need to get more value out of the existing clients, then we have seen many, many more moving completely into a retainer-based model. And I would say that it's probably shot up from maybe 10% doing it completely purely retainer based to probably 25, which is quite a big jump actually in our client
Yeah,
base,
definitely.
of people trying to get that extra value out of their existing clients, but also make them more sticky because clients have been taking stuff in-house, they've been moving away from the agencies. It's how do you really show that value to keep the client? So many, many more have been moving to pure retainer based models.
Yeah, that's interesting. I think one of the other things, from my own experience is that if I just go and look at a service provider, like an agency partner or something like that, if I can see the upfront packages, I find it actually easy for me to
Yeah.
understand, what they're doing, how they're going to price, um, even before we start that conversation. And so there's definitely scope outside of those packages, but it helps me, it's like us in a subscription sense. If someone's got talk to us and we'll tell you the price, I just think you're going to be super expensive, versus where they have their price as a subscription on the website. I think it makes it easier. We've got a
Yeah.
couple of questions here already, which is great. So from Aaron, generally, do you recommend 3 tiers within each offering, or a single 3-tiered package that includes different product offerings?
So it really depends on your agency and what you offer. If you are super niche down and say you make websites for accountancy firms and you do some marketing for that website for that accountancy firm, that's super niche down. So that agency would only need to offer 3 packages. The first package is we make your website. Second package is we make your website and we look after it. And the third package would be we make your website, we look after it, and we market it. Super, super simple. I don't think that's many agencies. I think the majority of agencies are doing significantly more. And whether it's niche down to be SEO or marketing or PPC or full service, you kind of need to take the separate services that you sell, and package them up into retainers. So if someone wants to come to you for SEO, it's okay, well, here's our 3 SEO packages, here's our 3 digital marketing packages. But that's not to say alongside that, you can't then have 3 full service packages, which is here's all of our services wrapped up into 3 separate retainer offerings that include different levels of outcome. And that's the key thing to remember. Yes, in the background, when you're working out the pricing, it's based on hours and profitability. But the way you sell the packages is it's based on outcome. So you'll get outcome X if you buy this package, you'll get outcome Y if you buy this package, and outcome Z if you buy this package.
Yeah,
Um, so it depends on your agency, but there's lots of ways you can look into it and lots of ways to do it. But the key is always do it in threes.
yeah, great. So I'll come back to the second one in the middle here. But so are these packages always on monthly rates, so it keeps repeating? So what about the initial onboarding, you know, website build, etc.? So getting the client into that, is that priced into it, or is that a separate, say, onboarding fee?
That's an even better question. So the agency that I've worked with over the last 7 years that I've seen do this the best has actually included that website build fee into the retainer and extended the length of minimum contracted term of the retainer. Because what happens is, say your retainer, to keep it super simple, is $1,000 per month. So you're charging $1,000 per month and you're charging $30,000 for a website up front. Actually, if you made that retainer $5,000 per month, it can make it a lot easier to onboard the client because they haven't got the upfront $30,000 payment. But more interesting, by year 2, they're still paying you $5,000 a month, but you've already built the website and now you're making significantly more without having to go and rebuild the website. So it can be a lot more profitable to charge it in the subscription model, but it also comes with a lot of risks. The client might not pay you, the client might go under. So there's a lot of risks and a lot more checks you need to do if you're going to do that model to include the cost of the build of the website into the retainer. Lots of background due diligence checks to make sure the business is legitimate, hasn't got any credit issues, and is not likely to go under. So it does come with more risk, but a lot more reward long term because you have clients paying you a significantly higher subscription. And if they don't cancel, they continue paying that higher price.
And you touched on the ICP component to that, and I think like as in knowing who the customer and that specialization. And we've actually done a whole other couple of webinars on this topic itself. But certainly if I look across our customer base, we deal with thousands of agencies. We see some very successful ones who are very specialist. So let's say they might do websites for law firms, and it seems to me that it's easier for those guys, to your point, to package that into a way, or it's for construction industry, or it's for health services or something. So
Yeah.
it becomes an easier package because everyone within that industry understands it. Because when you start talking very broadly about we just do SEO, it feels harder to kind of constrain the scope and et cetera to what exactly this person needs. Just an observation, I guess. A couple of other questions come in as well. I'll come back to these, but you touched on pricing. Like, how do you build that kind of buffer in, or making sure that the price, it's most effective for the agency and it is still profitable over time? Like, any kind of tips to give to people?
Yeah, so the key things that we've seen in agencies who have done this successfully is two parts. So it's not just the pricing of the packages, but it's how you look at the revenue of an agency as a whole. So it's making sure that over 60% of the sort of whole revenue coming into the agency is retainer based. Because if you do that, you remove the reliance on one big customer, where if you lose that customer, the agency goes under, or you have to half your staff. And the most important part is the agencies that we've seen from all of the data and all the research we've done, the interviews we've done with people, is that gross profit has to be over 50% on retainers. And that way it ensures that it works. It does allow for a bit of project creep. And then when you're working out all the pricing, you also have to look at how many heads you have in the agency. And you need to look to make 90 to 120K per head in your agency of revenue per year. So every person in your agency, from your senior developer who you may be paying more than that, to your junior staff who you'll be paying significantly less, should be bringing in, not them individually, obviously selling it, but as a business, if you've got 10 people, you need to be bringing in 90 to 120K per person. So now your revenue should then be sitting around $1 million if you've got 10 staff in the agency, is the best way to be looking. And that's what you should be aiming for. It's not to say that you'll be there right now and you're doing awful things if you're not there, but that's the level to be aiming for to be super profitable.
Okay, great. And what are the biggest red flags you see when the retainers aren't structured properly?
The single biggest one is customers don't buy them. And the reason being is complexity. So the biggest red flag is complexity. So if the retainer is too complicated to understand, don't assume that the prospect you're selling to understands what you're talking about. So if it's too complicated to understand, it doesn't have enough research going into it, and the delivery costs and the value perception and the pricing not being there, it's priced too cheaply, and it's based on hourly rates rather than the value or the outcome delivered. That's when we really see the people not interested, not buying it because they don't understand it, or you get slim to non-existent profit margins, so you're just not making enough money on it. But it all comes from complexity and being too cheap.
Yeah, okay. And there's a question from Taylor in the audience around how do you mitigate the approach around feeling that this is a very transactional relationship for retainers versus, agencies are often there as a partner and as, and around that relationship. How do they best manage that tension?
Yeah, it's a really interesting question, and it's one that we saw the biggest change in over the last 3 years, really, which is where consultancy is creeping up in terms of percentage of time spent on retainer work to the very top. And when we've dug into that, it's because when people move to this retainer-based model, SaaS-based model, productize their services, it felt a bit more transactional. And actually, the solution was more consultative work, so more sitting down time with the client, going through their business and all that side of things. You've still got that time, but actually charging for it. And it's now become the number one thing that people are making profit on in a retainer is charging for that time where they're actually just building a relationship. And it is really important because a lot of agencies sit in the supplier realm where you're just a supplier, you do this service for us, and we can go and move to another supplier anytime. The good agencies are moving to being a partner where they are a partner to that brand and they work together to achieve a desired outcome. And then the best agencies who are getting this right move to that strategic partner. So actually, before they even make a decision, rather than coming to you saying, hey, we want to do this, please, let's work together to figure it out. That's your sort of standard partner status. But the strategic partner is really when they come to you and go, hey, we want to do this thing. Can you help us do it, please? And you've achieved that relationship piece, but that's then when you can charge for that conversation of fantastic, let's come sit down together in a day and get a whiteboard out and figure out what we want to do, but that's all being charged. And you can have that as part of the retainer.
Okay, great. I've just noticed a question from Monica in here, but I wanted to go to, she actually sent us a question prior to this, which was around, we've touched on it a little bit, but around like how can agencies shift from that hour-based to value-based retainers, but especially when clients are busy and keep moving. Sorry, as in it's quite hard to get clients time. And so just for history, I've worked agency side, I've worked client side. One of the biggest changes for me when I understood going to the client side was just how little parts of advertising or marketing, the agency side of that you actually deal with day to day. You've got a much broader job, and so just getting that attention. And so how do you structure a retainer that can kind of capture that partnership component so you can understand their business more in more depth?
Yeah, and I think it's a really interesting one. It can be one of the toughest pieces actually that agencies can struggle with when they're moving into this. And the key is, say, the currency of the retainer. So it's moving away from selling time or tasks and instead selling a defined outcome. And you have multiple defined outcomes that are based on different times and different things in the background. That's how you're working out your pricing. But you're not selling the hours, or you're selling the actual outcome of what's going on. So you're basing the retainer on the outcome being delivered, i.e., you'll achieve X percentage lead growth, or we'll launch 4 new campaigns per quarter, not we're going to spend 20 hours delivering new campaigns and we're going to spend 30 hours working on lead gen strategy on your website. So it's changing the way that you talk about it to clients, changing the way that they perceive those packages to move to that. So it allows the agency to take full ownership of the execution to meet the defined outcome. And it removes the burden of the client ensuring momentum's never lost, basically, because you're saying, well, this is the desired outcome we've both agreed upon. This is how we're going to do it. And if the client's not coming back to you and the client's being too busy, well, you can still get to your desired outcome because you're getting paid for the results, not the effort.
And so Meredith has a great follow-on question for this, which is the outcome-based programs are becoming more difficult with kind of Gen AI, and the changes that we're all experiencing at once. And so, in her kind of point here, she says that in the last 9 months, it's getting harder and harder to sell those programs. So when you have sold clients on outcome in a rapidly changing landscape, how do you move them into different model that's not as strongly tied to results?
Yeah, it's very interesting. So I'm assuming it sounds like you're potentially a content-based agency if it's using generative AI. So it really depends on the type of agency. AI is having a big impact on everything. And actually, the areas where we've seen people use it the most is specifically around building these packages and pricing things for clients. So a lot of agencies have built tools and are sharing it with each other. Happy to share the name of the agency who's created one of them afterwards. But basically, it listens into all the conversations with the client. It's looking at what's going on, and it slightly tweaks the outcomes and it tweaks the pitch. So if you're going to win a new agency, as an example, it then creates the whole pitch deck immediately that you can present back in that meeting. Because you haven't had to go and spend a week building it, you can cut some costs off and win the client cheaper. But in this scenario where it's the outcome is changing, the thing that I've seen that's come out of this tool is lots of people are building into their packages that you review them monthly. And therefore, you're going to look at what's included in the package based on the new desired outcome and challenge of that brand. So, in the world of content generation or SEO, where it's going to GEO, AI, SEO, and you need to do different things, you don't want to lose that client. You still want to be charging the money. And you can either charge them slightly more money now because you're doing different things, or you change the deliverable at the end of it. Basically, what are you solving for them? And it's about then having those monthly meetings where you're going through this, where either account management or someone in the agency can do this. You go through and go, okay, well, this is the package you're on. These are the deliverables we did for you this month. Next month, actually, things have shifted because Gen AI has come in. And so we need to shift what we think we should be delivering for you because we think you should be here. Get the client to agree to it, and then that's your now scope for the next 30 days or the next 90 days, however you sort of package and charge for the retainers. But it's really important to touch base with the client. And that's not just for those changing times of AI coming in, but also to show them what you're doing. So it's, hey, you're paying us $5,000 per month to do X. Here's X. And it's
Yep.
showing them you're doing this every month, basically, as well. Because then they get that. It doesn't have to be a huge amount of data, but they just get that tick point in their mind of, yeah, it's doing what I want it to be doing.
And is this true for all sizes of agencies, you think, or is there a sweet spot where it's time to switch into this, or you can just start in this way? Is it true for very large ones as well?
So the largest agencies are pretty much purely retainer based. They just have more options. And what I've seen from the very large agencies is you can actually then go, hey, do you want junior staff retainers? Do you want mid-staff retainers? Do you want senior staff retainers? They start doing different options. But actually, it works across the whole board, and it works especially well for either tiny agencies starting out who need to, when you're first starting out, it's not safe. You are very much living project by project. You don't have 6 months cash in the bank. You can't pay your bills if you don't win the next project. But the retainers really smooth out that ride. That's why we call it roller coaster to rocket, because you are literally taking out the ups and downs and just going up. And if you cover that cost base of any staff you have, any office space you have, software subscriptions, all those other bits, then you can grow and you take off that anxiety of cash flow, which I'm sure everyone on this call with as an agency founder has
Yep.
gone through. Everyone who's a company owner has gone through. If you have recurring revenue, it just gets taken away because it's
Yep.
there and it's contracted and it's coming in. So it really helps that size. But then the most important is the middle piece. So if you are building an agency, which one day, 1 year you plan to exit, if your clients are retainer based with recurring income and contracted to your agency, your resale value goes up exponentially
Yep.
because here's a base of recurring contracted income rather than, well, here's 20 clients that we sometimes once a year sell a project to. It's a very, very different proposition.
Yeah, and I think also the other part of that is your if it's productized in a way that it's very someone else can come in and run the same thing. It's not tied to you and your knowledge necessarily.
Exactly.
It's driven by a process, and that process is proven to make money, in a scalable kind of sense. Then that's
Yeah.
where value comes from.
Exactly. And I think a really key piece to that is it doesn't just have to be John, your senior developer, who can do this one thing. Because a key part in all of this retainer strategy is each piece has to be built like a bakery. There's a recipe to doing each thing to make it repeatable and scalable. So you should be able to interchange any staff. Okay, you need a senior developer for this piece, but it should be able to be any senior developer. So you remove that reliance on certain staff members, you remove the reliance on certain ways of doing things, and you make it scalable.
Excellent. So we've got a few other questions in the Q&A, so we'll come to those. I guess there's a lot of great stuff we've talked about. Before we get into just some more questions, but if you had an agency had just 1 week to kind of get retainers to work, what are the three things that you would say they need to start or they need to do tomorrow?
It's a fantastic question, because 1 week's not a lot of time. It definitely takes more than 1 week to build a good retainer strategy. But what I would say you need to focus on is looking to the springboard model. So you need to build a foundation that you can leap up from. So you need to start small. You need to be really clear on your financials. You need to productize your best product. So if you've got 1 week, rather than taking everything you do as an agency, what's your best product? What's your most profitable service that you sell? Productize it. Turn it into your first simple fixed price, fixed scope retainer package. Becomes your anchor package that you can add to and build out on as you go. And then the key thing with that is you need to do a commercial deep dive. Make sure that you have a 50% gross margin on that product and that retainer. And then when people want to buy that service from you, you only sell it in a retainer based model. So you just have to stop selling it any other way. You just have to go straight in. Well, this is how we sell this product now, but these are the benefits to you and these are the outcomes you're going to get. And then you need to just stop selling anything bespoke outside of that package for that service, which can feel really, really hard. Particularly if you have a client come to you once saying, and you know that's going to be 5 times as much, 10 times as much. But actually, if they buy on their monthly subscription in a year's time, you've got 12 times as much. So it's letting go a little bit the worry about winning that next project and just doing it. So it's productize your best, most profitable product, make sure it's 50% gross margin, and just do it.
Excellent. Uh, okay, well, I guess we've got a lot of questions. So obviously, very engaged group of people we have here, and very engaged in what you're saying, Ollie, as I am. So let's go. We've gone through a few of them, but a couple of others. So we didn't touch on here. I'll go kind of from the bottom up. But so Claire or Celestia says, we found in past experience with retainers that one person, either client or agency, gets the short end of the stick. How do you strike the right balance between being profitable for the agency and still bringing value for the client?
Yeah, it's really interesting, and that's your research piece. So that's researching who your ideal client is, and that's the client that's most profitable to you, but the client whose your services solve the most problems for. So that can be that research piece is probably the most important thing you can do when building retainers. So it's looking at your profitability, looking at what you deliver best, what you get the best results on. But then you need to interview the clients who use those services and make sure that they're happy with what they're getting as well, so that you can find the happy outcome for each retainer package. And when you say people are getting the short end of the stick, as long as you're doing it in the right way, they shouldn't, because it should be really defined. These are our three packages. Okay, if you're not quite happy in package one, we move you to package two. And if everyone is very clear from the start, so this can happen more when you're going to an existing client. But if everyone's very clear from the start, so you're winning a new client, and it's, hey, these are our packages, these are the outcomes you will get. They're not going to feel short-changed at any point, because you've been very clear up front what these packages are and what the deliverables are. And then as an agency, you shouldn't feel shortchanged, because you've done your research to ensure these packages are profitable and that they are for your right clients.
Excellent.
Research is key.
Okay, so one sec. So Thomas, I'm just has raised his hand to ask a question. You there, Thomas? Nope. All right. Who else we got? Fabiola. All right. Also no. So we'll go back to the main Q&A. Okay. All right. So what do we got? So Claire, what retainer term length do you typically see that works best? Some clients get scared to be locked in for too long.
Yeah, really good question. And what we see works best is typically 12 to 24 months. 36 months, people tend to not want to sign up for, unless they've already gone through that first contract cycle, super happy, let's keep doing it. They'll sign for longer for a slight discount, 5, 10, 15% discount, the sort of standard ones for terms. But what we see a lot of agencies doing is that first cheap, get your foot in the door package. 6 months is typically what agencies are offering there. And then it's 12 months on your ideal package and 24 months on the bigger, more expensive package, because then you ensure you're getting the right people to sign up for each one.
Great. So from Niraj, how much do you think should WordPress maintenance service retainers be priced in a range per month? So which will be profitable and prospects are more likely to sign up front? So
Apologies, the audio just cut out for me there.
so how much do you think, like a guide on kind of pricing for, say, WordPress maintenance, service retainers, things like that? So I mean, my answer for this would be it depends. Going back to your question about like 50% margins, and so I think it's about understanding what your cost base is and going kind of from there on top.
Yeah, answered exactly right, which is how much does it cost you to deliver that? Make sure you're making 50%.
Okay. So I've just got a comment there from Meredith that we have audio disabled. That's why the raised hands are unable to speak. So sorry about that. We'll make sure we sort that out for the next one. So there was a question here. Yeah. So let me just kind of go through.
I've got one here from Meredith on, we have SEO, content, lead gen, web development, etc. So we do have a little bit of GEO that we're integrating into things these days, but clients who signed up with us specifically for lead gen types programs, we're being tested by campaign outcomes that are so bad compared to what they used to be. So I'll see the change in SEO to GEO. And some clients in our lead gen programs also have SEO and GEO, but some are only in campaign-based programs, and they use other agencies for SEO, GEO work. That sounds like a bit of perhaps marketing and account management of going to those clients to make sure that they're aware that you offer these other services, so that you do offer SEO and GEO. And perhaps it's worth having that meeting to say, hey, your outcomes are going down because the landscape is changing and you need to be doing GEO now. If you want to generate leads, us as a company at hosting.com, we have put a lot of work. We've got a fantastic header website. We put a lot of work into GEO. And so we rank very favorably in most LLMs, certainly ChatGPT, Gemini, the main ones. And that's generating a lot of leads for us as a business. And so actually it's kind of shifting that mindset to really need to focus here now and just having the conversation with that client, I think. And less retainer based, but you can obviously include that into a retainer and say, well, actually, this was your desired outcome to generate X number of leads. But actually, we now think to generate X number of leads, the landscape has shifted. You now need some GEO and it's going to be X amount extra on your retainer. So it's a good upsell opportunity.
Yeah, great. There's a great question from Claire here around what retainer term length do you typically see that works best? So some clients get scared to be locked in for too long.
Yeah, I think that's one or similar to the one we touched on earlier. So it's kind of depends on the package types. 36 months, most people don't want to sign. And what we're seeing a lot of is 6 months for the entry level, 12 months for your key ideal prospect, your anchor one, and then 24 to 36 for the higher tier price.
Yeah, great. Do you find it like the discounting on longer contract lengths is better or best avoided? I have very strong opinions on discounting, by the way. So
I have very, very strong opinions on discounting. I don't like discounting because you ultimately devalue your product or your service, and that's the price that people now have put as the value of that product, and
yes.
that's what I expect it to be. But if you're going to be locking in, a monthly recurring amount for 24, 36 months, then for sure offer a discount because why would someone sign for 36 V12? If you want to lock them in for a longer term, you need to offer a discount. But it's normally 5-10%. You wouldn't want to go anything more crazy than that, and you have to still build your retainers in a way that you're going, okay, well, at 36 months, we're still making 50% gross margin because you don't want to affect your profit by offering a discount.
Yeah, which is a very hard thing to know, I guess, in a sense. So is there any
Yeah.
tools that you can give people to help understand or frameworks to help understand kind of how their margins should be calculated?
Um, I do not have any that I can share, but there is many companies who have amazing tools for this.
Yep.
So one I'd really recommend looking at is the Wow Company. It is a UK-based company, but they work globally. They are an accountancy firm specifically for agencies,
Yep.
and they have tons of free tools and free models that you can use to work out profitability, work out what you should be charging. And they also run something called the bench press reports. So this is a annual report that actually shows profitability, what people are charging, what people are paying their staffs within the agency world, completely free to download, and it's a fantastic resource.
Yeah, great. I don't know the well company, and yes, I agree. It's very, very good information. To give another little plug to a previous webinar we did with a guest, there's a US company called Parakeeto. We did a bit of a deep dive specifically on pricing. Look at any of his comment. Marcel is his name, and he's amazing in terms of the content around how to price agencies, things like that. So really deep deep dive into his content as well. There's a question from Nick around, when selling outcome, not effort, I assume you need to know what it costs, which really what we're talking about, takes to achieve the outcome. What if more work is needed to achieve a goal? Is that custom to the retainer and not standard outcome? Is not a standard outcome everyone uses. So, I guess this is that scope creep question as much as this is like, what happens when we're not there and I haven't priced it correctly? Do I go back and have a conversation with the client, or do I wear that?
Yeah,
Like that
it
issue.
entirely comes down to how confident are you that you properly did your research. So I highly recommend everyone look at the Springboard model, use these frameworks, speak to these people, go watch the BugHerd webinar that's happened. We also have a weekly office hours webinar where we talk through these sorts of things. Make sure you've done your research. Be really, really careful before you launch a retainer. Don't just go, okay, well, this product makes me 80% profit. This is my retainer. I'm launching it tomorrow. Do proper research on the clients, do proper research on the time, the profitability, work out a sensible buffer within that pricing as well. So 50% is your minimum margin you want to be getting. So you might say, okay, well, I'm going to get 58%. And that allows us some buffer room across all of our clients who are paying us retainers to do a few extra hours here and there on this work. You need to be really, really careful and really clear to make sure that you are charging the right price. Because if you're not on a retainer-based model, it can be hard to go back to the client and say, actually, you need to pay us more. But that's also where the really defined in scope, out of scope with a retainer comes, which is these are all the things we'll do, these are all the things we will not do. And if you need these things, you move to the next package. And you make that really clear up front so you don't have to have a difficult conversation of, well, actually, sorry, we ran over and it's out of scope, but we didn't tell you it was out of scope, and now we need to charge you some more money.
Yeah, great. Another question from Nicholas. So you mentioned selling an outcome. Do you have an example of the sorts of outcomes that sell the best to clients? Does it have to be focused on marketing metrics, e.g. conversions, or have you seen it work well when, based on things such as SLAs, turnaround times, as an example, a dev agency that builds HTML, emails very quickly? So I can touch on this pretty briefly, I guess, is, certainly over time we see our, larger clients will pay for security. They'll pay more. When we say security, I mean that there's uptime guarantees, that that they don't have to kind of worry about whether it's going to get done and what time that stuff is, and people will pay premiums for that, particularly the larger the organization is. And so I think that's true across kind of anything. And going back to that specialization point you talked about, if you know the customer and you know the things that are most important for them, is it that I will turn around a HTML email in 6 hours for you? If speed is the most important thing, then that's what people will pay for. If it's that there's a guarantee that you will go and do some larger piece of work over a very different time frame, and that's more important to them, then it's just really about understanding who that customer is, and really what the triggers for value are for them.
Yeah, 100%. And I think if you look at your very specific niche, it could be volume of email, as you said, how long it takes to deliver it, so the turnaround time, SLA, or it could be, and the way that I would probably look at it a bit more, will deliver you emails that have a click-through rate of X or improved conversions of X. So it's sort of, you're looking at more the problem. Okay, you're writing a HTML email, but why do they want that email? What are they trying to achieve with the email? And it's looking at the other piece of it as well and adding that in as the deliverable. So actually, what are they going to see by having 200 emails made in 3 days? What does that mean to them? What does that give them? And it's focused on that piece.
Yeah, great. So Wodge has a 36-month retainer, can be cancelled much earlier if a client doesn't see the value, unfortunately. So when the uncertainty level is high, client's business, they don't want to be locked into any long-term commitment. And so there's that part. Now, the other follow-on for that is, I guess, how do you handle when clients are unhappy in that 36? If you've signed them to a 36-month contract and they are unhappy, like, what's the best pathway through that?
I think the number one thing there is you should know they're going to be unhappy before they're unhappy. So you should be having these monthly check-ins. You should know if you've delivered against the outcomes you've said you're going to deliver against, and you should be presenting that back to them to say, hey, look at all the amazing things we did for you to solve these problem, which you've paid us to solve. And you should be working very closely with them on that. So it should never be a surprise if a client is unhappy and doesn't see the value in what's going on. If you've researched your ideal customer profile and built your product around that, you should have the right customers for the product, so they should be happy with the product. And then if they're on a retainer where you've said, we are charging you $5,000 per month to deliver X, if it gets to the point that the client just wants to leave, but you are delivering X every month, from a contractual point of view, they can just leave the contract. But that's kind of a whole nother level piece altogether. But yeah, as I touched on earlier, 36 months is really not a length that people want to sign on a retainer. People want 12 months is your kind of ideal piece. 6 months is an entry level for the entry level package, 12 months, 24 months. Yeah, you'll struggle to get people on 36 months unless they're a client that's worked with you for a long time.
Yep. Adrian has a good point here as well, as a good addition to that. So couldn't we just do a barrier to exit charge for cancelling early, written into the contract? I mean, it's a little, we're in a similar business again. Obviously, talk to this to some degree, is that the problem when someone's unhappy and feeling forced, even if there is a charge cost, let's say your mobile phone as an example, where you want to cancel a contract and the telco says, okay, well, that's going to cost you $1,500, but you're like, I'm very unhappy with this. It doesn't, I don't think, always set the best kind of customer experience, which has an impact of those people talking to other people and etc. And sometimes it's better to help them out if it's really not working in the relationship, because if the relationship's bad, it's also going to stress your agency quite a lot. So it's sometimes better to kind of that one doesn't work, we'll find a way through it. I don't know if you have anything else to add to that.
No, I think you're completely right. It's I'm always of the opinion of not absolutely forcibly holding someone's contract, because it's just going to damage your reputation as an agency, and you just want to move on to win the next client. But I think that you shouldn't be getting to that stage because you should be having monthly check-in meetings. You should be know what's going on with the account, know what's going on with the client, know if their view on value has changed. Can you now tweak what you're offering them in the retainer to suit what they now perceive as being value? 9 times out of 10, it's because they've logged on a website or gone on Gemini and seen someone else offering the same thing for 80% cheaper. But it doesn't mean they're delivering the same product and service and value. So it's checking in and making sure you're aware on what's going on so that you can be on top of it before it happens. I think is the most important piece.
Yeah, great. And there's a little follow-up question from Nick around it just doesn't sell how you can it doesn't see how you can sell an outcome for the same price to different clients. So when each client is unique and the amount of work needed can be different and unique. So unless he's misunderstood and each package is the same, but pricing is dependent on client and effort to achieve the outcome.
Exactly that. So the packages are the same in as much as it's the services that are included in the products. And in the background, you're working out the price based on, okay, this is going to take us 100 hours to complete. But you're not saying this is taking us 100 hours. You're saying, your outcome is 100 leads rather than 50 leads. So therefore, your price is twice the price of the 50 leads way of doing it. But your first package wouldn't just be on the number of leads outcome, it would be on multiple pieces that are included. Then as you get to the next step up, it'll be extra services included. Next one up, extra services included. So you're adding additional services rather than saying we'll give you another 10 leads through the packages. So you do need to adjust the price to each individual client because they will have a different desired outcome. But that depends on your niche as well, because if we go touch back onto that accountancy one, so if you're an agency building a website for an accountancy, what is there that's that much different between what one accountancy needs to another one? So you can, in that scenario, very much go, this is the price of this product.
Yeah. Yeah.
But what you can do if you've got hugely varying outcomes for clients is this is a ballpark price for this desired outcome. So when they go on the website and when they look at things, they can say, okay, well, if I want this is the price. If I want this is the price. If I want this is the price. Well, I want something a bit different, but okay, I know roughly what price it's kind of probably going to be because I can see the outcome here at this price.
So I guess as a final one, given it's an absolute specialty for you, is how do you see hosting and hosting kind of, how do you see people selling hosting services as part of retainer packages? And this is
Yes.
not I know that this isn't a sales pitch, but this is just a
Yeah.
genuine interest
Yeah, no,
question
not at
for me.
all. Yeah, not at all. Funny enough, it's how I learned about retainers to begin with, right? Because it was helping agencies to move away from seeing hosting as just a cost of doing business, and instead seeing it as something that can be resold for profit. And the easiest way to do that is include it in a retainer. Obviously, you need to be an agency that does something web related for that to work. That could be SEO, where clients need to be all on the same stable, fast hosting to make so the differences you're making are showing, or more likely you're a web dev agency, so you're making websites. So the easiest way to include hosting in a retainer is to build it into a web maintenance package. So web maintenance package one is basic hosting. You're not getting an SLA from the agency on a response time to an issue on your website. You're not getting any dev hours. We're just going to update WordPress for you. Your package two is we're going to update WordPress. We're going to give you 2 dev hours per month to make color changes or write a blog post or whatever. And your hosting is now included with an SLA. If you have a website problem, you can contact us as the agency and we will come back to you within X amount of hours. If your website was down for X number of hours, you get a credit back in your account for whatever. And then your top tier package is you now get full security add-ons. We give you a monthly report of what your website's doing and everything that's going on. You get 10 dev hours a month now to look after it. All the while we're updating all the WordPress side of things. And now you're on your own high performance hosting that's going to ensure your website's online 100% of the time and super fast. So it's building it into a retainer package, but again, ensuring you're making 50% gross margin on the cost to you for hosting. So if you're paying $10 a month for hosting, you should be charging $20 a month. If you are paying $100, you charge $200. It's just making sure you've got the right amount of margin on top.
Yeah, great. Well, in the interest of time, we'll wrap it up there. There's probably a few questions we didn't get to, so we'll go through and we can follow up with those afterwards. But thank you so much, Ollie. It's been very valuable. I've learned a lot. I know our audience has got a ton of practical takeaways. In the chat, but we'll also follow up. We mentioned a couple of, like they're in the chat now, but we mentioned the WoW Company and Parakeeto. We'll send those through as well. We'll email a link with full recording within 24 hours. There will be a short survey as well, just asking whether people found this valuable. Ollie, any final thoughts and potentially an offer for the audience?
Yeah, so final thoughts for me is, we've covered a lot, but I think if you're just going to take one thing away, let your retainer problem, your retainer problem is a structure problem, not a client problem. So the difference between an agency with unpredictable up and down project revenue is one, and one with stable, recurring, profitable growth is just the design. It's how you've built out that retainer, how you've researched it and built it to make it simple, make it clear, make it profitable, and just do it.
Excellent. Well, thank you
And yeah,
again.
in terms of an offer, anyone who's on this webinar, hosting.com do have a managed WordPress product with an offer on it, can be found in the details that will follow up. It means you basically pay $1 for first month of hosting for our managed WordPress product to test it out. It's fantastic product with 30-second support response time. So yeah, highly recommend giving it a try.
Which people will pay for, as we've discussed.
Yeah.
Uh, all right, brilliant. Thanks, Ollie. Have a wonderful rest of the day, morning, evening for everybody. Yeah, we'll follow up with all of the stuff discussed in post this. So see you later.
Thanks all.